Hi, this is Zak Mir from Master Investor with a look at some bulletin board hero stocks on Monday, the 27th of April. Starting off with Metal Tiger, where you can see that shares are in a rising trend channel, which has been in place since basically the autumn of last year. Looks like we're in the run up to a golden cross buy signal between the 50-day and 200-day moving averages. They're shown in blue and black respectively, and a little V-shaped April bull flag as well, just resting above the 20-day line at 0.87. Best way forward here probably to buy on dips towards the 20-day moving average using the floor of the channel from September and the 50-day moving average as the weekly close stop loss at 0.77 pence. The target as high as the top of the channel from last year at 1.4 pence over the next 2 to 3 months. If you're cautious on the shares, maybe wait for a break of the 1 pence level just as a momentum buy trigger. Next up is Oilex, which has been a sort of favorite of mine for quite a while, last best part of the year and even more. What we have here is an extended bull flag based towards the 3.5 pence level, rising trend channel from October, top of the channel up to 5.5 pence. And the view is that at least while we hold above the 3 pence area, that was formerly March resistance, the shares should head towards the implied target. It's also helpful that the latest bounce for the stock after the break of the 50-day line came in the form of an unfilled gap to the upside, so it shows that pretty decent momentum is behind this saucer-shaped recovery that we've had since the autumn. Next up is stock which has been sort of messy in the near term, but overall the construction here at Paragon Diamonds looks to be positive. We had the break through the 200-day moving average zone in the autumn, November, beginning of December. Golden cross buy signal at the beginning of December as well between the 50-day and 200-day moving averages, and since then just basically a consolidation. The view now is that while we hold above the 200-day moving average at 4.76 pence, the shares could hit a target as high as 8 pence over the next 2 to 3 months. If you're cautious on this situation, you'd want to see a momentum buy trigger such as an end of day close back above the blue 50-day moving average of 5.77 pence before pressing the buy button, or at least assuming that there'll be more upside. Lots of requests for Red Rock Resources. Quite strange, really, because the shares, the chart doesn't look fantastic, let's say. Still in this sort of general downward move from the autumn. The 50-day moving average shown here in blue blocking the moves generally. We've had the odd spike through it. That's at 0.08 pence. So probably what you want to see here in order to get to be more confident that we are going to see a sustained turnaround would be a weekly close above the recent 0.1 pence resistance, and that would take us back to the 200-day moving average at 0.16 pence. But at this stage, at least only back below, say, 0.07 would be outright negative, or at least delay the upside scenario. There is also a positive looking return in volume here. Friday was a good day on the buy side volume as well, so there is a chance of a turnaround coming up over the next few weeks. Finishing off with Teathers Financial stock, which there seems to be a lot of interest in. Had sort of quite a sort of rocky ride. The first push towards 7.5, 8 pence was in March. Another one earlier in April. Now it looks as though we bounced off the floor of this rising trend channel from February. That's around the 4 pence level. And while we hold above the 50-day moving average of 4.21 pence, there is a chance of another swing to the upside, 7, 8 pence over the next 2 to 4 weeks. Probably only really back below 3.5 pence would be outright negative on this situation. That's it from me. More updates on masterinvestor.co.uk.